Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the market was mostly range bound, but a couple of things to note is that it tested below Friday's low and found responsive buyers, and it tested above Friday's high and found responsive sellers. So we saw a failed breakout attempt here in the overnight session, and heading into the open, the market is very balanced and two-sided, but we have seen that failed breakout attempt already, and for that reason, the overnight bias is neutral bearish. The short-term bias continues to be neutral, and until we actually break either above initial resistance or below initial support, the market is stuck in a range. But given the failed breakout attempt that we've seen so far, if we start seeing more signs of sellers gaining control off the open in real time, then it could lead to a breakdown below 31 to 33 and 26.75 to 28.75 for a test of 17 quarter and 19 quarter, and potentially 11.5 to 13.5, at which point responsive buyers can re-enter the market and still be active at those support zones below. But until we actually get a break outside of the initial support or initial resistance zone, we have to understand that the market is stuck in a range within a overall bullish pattern. So off the open, if we are not seeing any significant weakness or any significant strength in the underlying environment, so if the advanced decline is very flat or just not really signaling a lot of excess strength or weakness, then we could continue to be range bound here. In order to break out or break down, we're going to have to see sustained momentum in that direction and a very weak or strong AD, which is trending in the direction of the break. So for example, if the sell side gains control off the open, in order for the market to really liquidate and have a sustained breakdown below initial support and the micro bull bear zone, we would have to see sustained downside momentum. So the NYC tick holding below zero. We'd have to see a very weak advanced decline, which is trending lower. If those are present in real time, then it can lead to a breakdown and a test of 17 quarter to 19 quarter and possibly 11.5 to 13.5, at which point the buy side can step back in. On the upside, in order to break out above 42 quarter to 44 quarter, we would have to see broad market strength. So a lot of strength in the underlying advanced decline, which should be trending higher, and sustained upside momentum. So the tick holding above zero. And without those, if we're not seeing really any momentum in either direction, the market can continue to be range bound and chop within a range between initial support and initial resistance. So off the open, these are the signs to look for. Does the underlying environment really support the idea of a breakout or a breakdown? And if so, then the focus should be in the direction of the breakout or breakdown. And be careful on the counter trend side. So if we're getting, for example, a breakdown below initial support or below the micro bull bear, then we should be cautious on taking fade setups on the long side, unless the market is really exhausted into a good support zone, like 17 quarter or 19 quarter, or 11.5 to 13.5. And even then, understand that if it is a balanced breakdown from the last 2 days range, the intraday bias can continue to be bearish. So even if you're fading 17 quarter or 19 quarter, it doesn't mean that you have to hold it for a huge move, unless there's some real strength in real time that you're noting. But the expectation would be just for a reaction of 17 quarter and 19 quarter, perhaps back up towards 26, 27. So that's really the environment we're in right now. Very range bound here in the overnight session, very range bound over the last couple of sessions here. Buyers more dominant last week, but now as we test larger time frame resistance and continue going higher, we have to continue to see strength. We have to continue to see sustained upside momentum and the other markets participating. And if we don't see that, then it can really stall the upside move here. And then it'll make sense to be more careful on longs. So that's the environment we're in. Let's see if one side can really take control here off the open, and we'll take it from there.